Hello, everyone, and hello, Shakthi. It's been a bit of a break, but we are back and we are not going anywhere. There are so many news on stocks market. I've read recently an article written by my favorite article writer, Shakthi. And that was about Netflix. Well, please, guys, find it. We'll share with you the link, and it's also on our website in the blog. There are quite a few interesting points which Shakti has highlighted. I'm sure you will love it if you're interested in stocks market. If you are not interested, then you will become interested. Well, and the company is Netflix. Shakti, please, let's start.
So happy New Year. So Netflix has recently dropped by around 40%. And I was interested in looking at the stock and checking if the valuation is at a fair value at this point in time. Because usually after a crash, such big companies do come on sale. So I was curious. I went back into the charts in our app and whatnot. Maybe you can share the chart and I can show you my experience of Netflix in the last 3 or 4 years. I at one point was pretty much interested in putting all my money in Netflix because it looked pretty attractive at that moment. So it's around 2021. Let's go to the chart. So if I remember, around 2021, the stock started crashing a bit, and it continued to occur for 6 months or so. So if you go to the chart and look at the 5-year history, yeah, you see that big drop between October 2021 and May 2022. So within a span of 6 months, the stock crashed 75%. And up until that point, if you go back in history like 10 years, um, you can see that the stock has been performing really well. Even during COVID crash, it didn't drop a lot when compared to the market. So as an investor, you would be pretty confident that this company is going to do well, right? And all of a sudden, in October 2021, we see this crash because there was some negative news around password sharing and future growth potential, so on and so forth, and also competition. At that time, because COVID created this new wave of online subscription models where Disney came in. Amazon Prime was already there, but it was also a big competitor. So with all this competition, investors were not sure if Netflix can hold the market superiority, right? And the result was the stock crashed by 75%. What do you think about that?
What do I think about that? So it would be great if I would be interested in stocks market back then.
Yeah, we missed the boat.
And
But
got
let's see. Yeah.
do you know anyone who got Netflix during that time?
Yeah, not just anyone. One of the super investors, Bill Ackman, he started investing during the first drop. So you see that there are two drops in that time frame, and it was a 40% crash first. And I think he jumped in during that time because for him the stock was undervalued or at least fairly valued in his opinion, and he believed that the company had a lot of potential to grow in the future. And he was absolutely correct. Right? His thesis was correct, and he invested $1 billion or so at that time. He bought 3 million shares. They didn't have a stock split at that time. Right?
Which date was that?
Yeah, I think you're pointing at the right place around that time, right? The
Yeah.
first drop.
Yeah.
So he got in at that time, and then surprisingly, within a few months, he decided to sell off everything, and the stock did crash further, and he lost 400 million out of that 1 billion, and his positive sentiment suddenly turned negative within 3 months or so. And people are confused, right? He's a super investor and he has a team of very smart analysts. How can he suddenly make this flip? But he justified at that time saying, we do not have visibility on this company. When we bought it, we thought it's great. But when we did more analysis, we are a bit concerned. But his original decision was great because after that drop, the stock has come up 650%, right? If he had held that 1 billion, even after the crash, he would have made almost 4 billion, with the current price or at the peak. You see that peak that happened, 650%, he would have made 4 billion at the time. So
Yeah.
even the best investors who are managing billions of dollars can make mistakes when it comes to the stock market. So we should be cognizant of that fact and tread carefully when allocating some stock to our portfolio. Maybe he would have stuck to it if he didn't invest 1 billion. Maybe if he did 200 million or something like that, he might have stuck to it. But since the money was big and it's not his own money, he's managing other people's money. So yeah.
All right.
Have you had the same experience with any of your buys? I know you have started your own portfolio. How do you look at that?
I just buy and I just forget about it
Exactly.
pretty much.
That's one of the best options, I guess.
Yes and no. I believe that you still have to review what is in your portfolio periodically. So if you can help me with that, that would be amazing.
We'll do that. We'll actually review your portfolio once in a while. We'll make some video on that next. Yeah.
Yeah, that would help a lot because I just got something, let's say half a year ago. Some of my investments went really well, incredibly well, including Google.
Yeah.
Um,
But overall, you're doing well, I believe, when I checked last. Yeah.
it is positive.
Yeah.
Overall, it is positive.
And we'll discuss your semiconductor portfolio.
Absolutely, absolutely. Regarding Netflix, I'm just wondering how did it happen this way that it's like COVID and everyone's supposed to be very bullish regarding the company. Now every single house I think has Netflix right now. Do you have Netflix yourself?
Yeah, I started in 2013. My first show was House of Cards, my favorite show. And since then I've had Netflix and yeah, it's good. Because, you're right. During COVID, everything went up and that actually happened. But the crash started after COVID because I know in
After.
Australia, the COVID scene was still going on at that time. But in the US, it was kind of ending. So after the COVID crash and now investors are thinking people might go out to work. They're not going to be stuck at home now, right? So will we continue to see this growth after COVID? That was the whole dilemma with all this extra competition in the field now. Yeah, negative sentiment.
Similar to Zoom scenario. Okay, cool. But what do you think? How can Netflix justify its
Yeah, what?
value
Yeah,
at the
because
moment?
now after that spike, it has dropped almost 40%. But as you see in the chart itself, it is
Yeah.
still highly priced just from the chart. But if we go to the actual numbers, we use our discounted cash flow model. And as you can see, the company has to grow by 25% for the next 5 years to justify its current market price, even after this
Yeah.
40% discount. So, which means the company was extremely highly valued right before the crash. Even now, it's highly valued based on numbers, right? But we don't know how the market will react.
How realistic it is that it's
Yeah.
gonna grow at 25%?
So when I looked at the recent financials, actually, if we can jump to that article that I made, I had put some numbers on the recent financials. We'll go to the bottom of the article. I think there's an index page also at the top in the article. So you can just click on that to get to the financials. If you
Ah,
scroll down, there was an index. Yeah. Do you see any? Yeah, Q1 earnings snapshot, Q4
yeah.
earnings snapshot. Yeah, it goes there, right? So now here you see $45 billion in revenue, $10 billion in net income, which is amazing. There are 325 million active subscribers who are actually paid subscribers, which is amazing globally, right? But we should be cognizant of the fact that the I think the subscription price in US is much higher compared to some developing nations. So it's not that everybody's paying the same money. That's my understanding. Even then, Netflix has a growth projection of 12 to 14% year over year in their statements. So the future outlook is like maximum 15%, right? But our valuation says it needs to grow by 25%. Even management doesn't say that it will grow by more than 15%, 14%. So market is aware of that, and probably that's why the stock is very stressed now and it's dropping. And we may expect more downward trend if the market continues to believe that it's highly valued. But you never know. Markets react.
Yeah.
Nobody knows. Yeah.
Okay, I want to check something quickly.
Yeah.
So, management says 12 to
Yeah.
14%, right? So, okay, I just want to know at what price I would buy Netflix then.
Okay.
So, right now it is priced as like around $80,
Yeah.
$85, right? If I just move it to
Well,
12, okay, I'm getting it for 47.
yeah, at 47, around 50 makes more logical sense. That's a great observation, right? So now, as a long-term value investor, you may want to wait. But again, as I said, you never know if it will come back to that or continue to keep staying in the same position and grow from there. But that's up to the investor like you to figure out.
All right. Should we look quickly at the financials?
It should be pretty good because the revenue has been growing really well. Net income is also positive for most of the years, and also the free cash flow. Yeah, it's what we have calculated.
Yeah. We can look at
The cash
cash.
position, they have 7 billion or so in cash in the latest year.
Yep.
Yes,
Yeah.
and I think the debt is around 13 to 14 billion long-term debt. So they can easily cover their debt with what cash they have. So it's not a problem. So financially it looks strong. And if they continue to grow their subscription, either the subscription count or the value of each subscription, they do keep increasing their monthly payments. And that is one way they continue to grow their revenue. Adding more subscribers is a challenge because they are already sitting at 325 million. There's only a few that many people in the world
Yeah.
who can buy Netflix. So there are challenges in that area too. Now, but the free cash flow that we have calculated at the top should be showing a positive result between 22 and 23. And that's where the stock flipped. It was going down, but then since the free cash flow started showing positive results, the stock has come up really well. And it has been flat last year, but hopefully this year they'll keep growing. So free cash flow is a very good metric to check whether the company is doing well or not. Even though the revenue, as we noticed earlier in the revenue chart, that the revenue was increasing consistently, but it was not increasing a lot. So I don't think the stock reacted for the revenue. I think the stock reacted for the free cash flow that they have.
Yeah. Yeah. So if we go back
Yeah,
in the
as you can
revenue,
see,
it's
yeah,
pretty much
it's pretty good, right? So
steady.
why will the stock crash when the revenue is strong? And well, let's see the net income. I think there might have been a drop in the net. Yeah, a little bit of a dip, and that's when the issues started. But then they have come up really well. Yeah,
Yeah. Cool. So they don't pay dividends, right?
yeah.
And they do little bit of
They're doing a
buybacks.
buyback, which is recently they've been doing it. That's good.
Yeah, 6 billion in the last 2 years. That's cool. All right. So, should we look
Yeah.
at who owns Netflix? Super investors.
Super investor. Who are the super? I know Bill Ackman sold it long time back. So Netflix, yeah, Philippe Lafont has 3% of his portfolio, or 2 point whatever, 740 million. But that's a pretty low number. So I don't see anybody having more than that, which means
Yeah.
they're playing it safe and not investing too much into Netflix, but it is still part of their portfolio in a sizable amount. Even though the percentage is low, some of them have millions of dollars, hundreds of millions in Netflix.
What do you think regarding competitive advantage of Netflix?
So as a
Netflix more.
customer, I have never even thought about unsubscribing to Netflix, even
Yeah.
though they keep raising their price over the last 10 years or whatever. Because for me, it's like they always produce something that I want to see, and I don't want to miss out on that. It's like fear of missing out on a nice show. Right? I don't want to resubscribe or something like that. And then there's this recent news of them trying to get HBO inside Netflix. That will be great news for me because I don't have a separate HBO account, so I can see all these HBO shows in Netflix. So I'm curious, right? If they can pull it off with all the challenges that they have now, that'll be great. So from my point of view, that is the moat, and it's the brand value and the trust that we have on Netflix. They always deliver something, right? So that is the mode they have. Trust is the key. Even though there are competitors, I think trust will keep this stock and company up for a while, yeah, as long as they can deliver.
And what about AI? AI.
What do you think? You are a data specialist. Tell me, what is how do you think Netflix can is or can use a
They have data about so many users. If
Mhm.
every single house is subscribed to Netflix, so preferences, what people like, what people don't like,
uh,
what they're looking at, so they can even utilize the data in some other way. So knowledge is power.
yes, you're scaring me. They know everything about me over the last 10 years
Absolutely, they don't know anything about me. Ha
because you don't
ha. I don't have any account. I just
Okay.
I steal my friends' accounts
See,
sometimes.
that was one issue, right? Password sharing was a problem. That's the main reason the stock crashed. Okay.
Oh, I was that one that.
So you
Oops.
caused the crash.
Come on. I watch Netflix once in a blue moon.
Yeah, I know, I know. Yeah, cool. Yeah, you're right. And also they are the initial implementers of machine learning concepts, wherein they show you preferences and all that. I think they've been doing it for a while, and they're experts in that area, AI. So, and also I noticed in our statement that they have a revenue of around 1.5 billion for ads, which means that's a new revenue stream for them. And the ad revenue has grown by 2.5 times compared to last year. So in the
Yeah.
article, I was able to pull the latest quarterly data, which has this mentioned that they have around 1.5 billion in revenue for ads. So yeah, ad revenue growth, and it's been awesome. So if they can continue to grow at the same rate, because it's a very high rate, that could be a nice revenue stream for them because they have the users. Now they can show ads, whatnot. I haven't seen any ads, but looks like they're making money out of it.
You know what I think regarding that? Right now, ads are so smart that
Mhm,
people even not having a clue that they're watching an ad, but
mhm.
it is happening. You're just
Yeah.
recording some way in your brain, and then you are just
Okay.
acting the way that Netflix has shown you.
Yeah.
Scary.
Yeah.
All right, on this page, let's
ESG.
move
Okay.
to ESG. So there is some AI powered
Mhm.
ESG insights.
Yeah.
We went through it not that long time ago,
Yeah.
actually. So what do you think?
So
Are
let's see
they
the
green?
measurable progress. I'm more interested in the measurable progress of if you scroll down, what else do you have?
Well, here we have scope 1 and 2 emission is reduced by 50% compared to 2022. Which year they're comparing here? 25 to
No,
2022?
it depends on what information we can get from their website, and this is what they have, which means they
Yeah.
are working on it, and they are interested in reducing their own carbon footprint. And also, I can see that they are focused on using renewable energy for all their stuff. Also, I think the scope 3 emissions, which is outside of their purview, is the major reason for concern, right? Critical analysis. This they won't mention in their report, but we know that they probably are using data centers and whatnot to power their whole website, right? And those might be using a lot of energy, and that could be adding to their carbon footprint. And I'm pretty sure they might be working on making sure they use green energy. And yeah, so over 200 liters of what sustainable.
Uh,
Okay, 200 titles. Okay. Oh, okay. So
to
they're saying they have sustainable content uh, in their site, which is
Amazing. How
impacting
how
80%.
does it okay, okay, brainwashing,
Yeah.
brainwashing.
But anyway, they do that. I have learned a lot from Netflix documentaries about these things. So technically, it is good.
Well, knowledge is power. You've mentioned regarding data centers, and we did have a discussion previously. So everyone is blaming IT companies,
Mhm.
those big companies which are using AI and data centers, in being
Yeah.
too power consumption
Yeah.
intensive. I'm just wondering how much emission do we have from data centers? So, do you know? Do you know?
It will be a great, material to look at. Yeah.
That's my task.
Awesome.
So everyone remember, I'm gonna estimate
Yes.
total carbon emission from data
Data
centers.
centers. We'll hold you responsible for that.
So um
Yes.
and
Percent
let's
rate.
leave our perception. So good health and well-being. There are pros and cons. Sitting in front of TV can be not that great, but at the same time, well, sometimes you get nice shows, nice vibe, your mood is elevating. How would you rate it?
Yeah, 7 or 8 at least. Yeah.
All right, 7. 7. Quality education.
Yeah,
Uh,
they did mention, right? They have good documentaries on educate. So we should give them because I've learned a lot. It is true. I've learned about the universe in Netflix.
well, that's about quality
It was
education.
quite good quality. The content is of amazing quality. At least it was. Recently, I've not seen any documentaries. It's my thing. But in the past, I used to learn a lot from Netflix documentaries.
Okay, you're smart. I give them 8 for this. All right. Gender equality. So everyone is equal. Have equal access to Netflix.
Yes, and also in their
Clearly.
workplace, decent work and economic growth. I think that also reduced inequalities. All of that.
Yeah. Clean water and sanitation. I believe there might be some issues related to Scope 3 and data centers.
We'll just leave it at that. No.
It's difficult for me to estimate. Affordable and clean energy.
That is
They're
the
talking about renewable energy and
Mm.
yeah.
Yes. Hopefully, they're working towards it. Yeah.
Decent work and economic growth. I'll be super bullish.
Yes.
Can I put 9? I went through a couple of case studies on Netflix and how great they are in terms of workplace. It's one of the top workplaces at least a couple of years ago. I hope they still hold it. Industry, innovation, and infrastructure. 8?
Yeah. Innovation. Yeah, of course. Because they were the first to implement a lot of latest tech. Yeah.
Yeah, and reduce inequality. I believe everyone is equal in front of Netflix.
I mean, not only
Uh,
that, even in the workplace, I assume they have given equal opportunities for everyone. So
let's go for 9. What else do you think?
responsible consumption. Again, we're talking about energy, right? That's something that they have to work on. So I would leave it at that because there's something that they need to improve.
Pros and cons. Yeah, yeah.
And climate action, we already saw they're putting their thought into that, and hopefully they're producing results. So since it looks like they are doing something, give the benefit of the doubt.
Yeah, let's go for 7.
Partnership to gold.
And
They are working with artists, right? And they've created a lot of nice shows which wouldn't have happened if it didn't come directly to the platform. If it was only theater releases, then there were very less limited opportunities for the artists. So they've done a good thing partnering with them. Yeah.
so a peace, justice, and strong institution.
Yeah,
I would.
they are not shady, so it's good.
Yeah, absolutely. And then let's
Good.
submit.
Okay, cool.
Ooh.
Photograph. It looks nice.
So environment 63 and social 71. They're probably the winners so far. Governance 68. Amazing. We rated them greater than medium score. Well, I think we are in a good mood today. That's pretty much it for ESG part. Please, guys, help us to rate the companies. That's very valuable data, and it helps a lot to understand sustainability of investment.
When we're making an investment decision, now, see, sustainability is not just about climate action. There are so many other parameters that we are talking about.
Yeah.
So a company, before you put your money in a company, I think it is worth knowing what they are doing towards these goals.
My favorite part, Academy.
Mhm.
I like it. So, see, I'm orange. I'm orange.
Orange and 33 steps completed. That's awesome.
But we did talk about fair value quite a lot, and we have 18 questions there. So, yeah, what is DCF? It projects future free cash flow and discounts them to date.
Yep.
Okay, it is complete, and let's do
A quiz.
one quiz.
Growth rate assumption.
Okay, let's do it. Which growth assumption is safest for this year? Aggressive. It is aggressively. Okay. Extremely optimistic. You know, zero growth. Boring. No, it's just for those pessimists. Okay. Yeah, but you know how easy it is to answer those questions, but when you actually need to act
Yes.
and do it, it's quite
It's not the
difficult.
same. It's like there's a lot of psychology involved in this whole game. So yeah.
Yeah. Okay, valuation sensitivity task, last task, and then I will let you go.
Yeah.
Wait. Open an estimator and adjust discount rate. Observe how intrinsic value changes. I will mark as complete already, but we
Discount rate,
will do
when
it.
we do it, our logical assumption is in simple words, if I want 8% growth from this company for the next 5 years, let's say, I would set my discount rate at 8%, which is what I call the target return. So if you go to more adjustments, there's that tab below the value. So you see discount rate, and
Yeah.
that is something that I expect this company to deliver to me in the future. So if I'm setting it at 9%, I want 9%. So if I keep increasing that expectation, you would see that the fair value estimation keeps dropping, because the more money you want,
11%.
the less the valuation. So you need to keep your expectations grounded if you because currently the market is overvalued in most cases. Having
Yeah.
a higher expectation, it will be very hard to find any stock that suits your need now. Yeah.
Yeah. So there is also that button to adjust terminal growth.
Yes.
Tell me
I
about
think you know that.
terminal growth.
We just studied during the financial.
I know, but I just like when you are
Yeah. So,
explaining.
so the terminal growth is for anything beyond the 5 years that we have set. So we have set the forecast period as 5 years. So anything beyond 5 years, we don't know. It's too much into the future. So we would just say, okay, this company, I believe, will grow at least 3% after 5 years indefinitely, which may or may not happen, right? If you reduce the terminal growth to 2%, again, you will see that the fair value estimation drops, because you're expecting a lower growth after 5 years into infinity, right? So now, as you see, the value even dropped further. So terminal
Yeah.
growth is something that is what you expect after the forecast period that you have in mind.
Yeah. And there is also forecast period,
Yeah.
and it is set for 5 years. If, let's say, I increase it to 7 years,
Yeah.
it would mean that my assumption that the company will grow continuously with a growth
25%.
rate of 25. And after 7 years, it's going to grow with
Yes,
2%.
exactly. Right.
Then we can reestimate
Now it will go up,
and
because now you have it increased from 5 to 7, which
yeah.
means you have more visibility because you are a fortune teller, right? Now you can see what happens in 7 years, and if you go 10 years, you're the boss.
So let's go for 10 years. And I'm happy with discount rate of 8 as it was. And then
Terminal at 3.
let's reestimate.
Now it's like,
Woohoo!
see, the more clarity. I mean, you have set a growth rate of 25%, which is outrageous for next 10 years. But if you have that kind of confidence in this company, it is highly undervalued.
Yeah, yeah. Well, great.
Right.
Thank you, Shakti. Remind everyone, please like, share, and subscribe. You will see more and more stories about different companies. We're super excited to share. There is Amazon to discuss. I'm starting operations right now, and that is
Yeah.
incredibly interesting company. It's
Yeah.
also interesting company in terms of AI and what they
Yes.
do in that space. There is portfolio building and semiconductor portfolio, which is growing as crazy from the time I have created that. It was just a couple of months plus 20%. Imagine that. We haven't done the review of Shakti's dividend portfolio. That
Yeah,
is
we'll do that.
very interesting.
I'm excited. And again, your semiconductor portfolio, I was skeptical when you started it, but I I submit. Awesome.
Yeah. Then we have also a few shady companies in semiconductor industry that would
We'll
be
discuss that. Yeah.
quite curious to talk about. And there is a revision of my portfolio as well. So I have additional about 6,000 dollars which I want to invest. So it would be good to pick something right now, or maybe wait a little bit. Who knows?
Yep.
Thanks, everyone. Thank you,
Thank you.
Shakti.
Thank you.
And see you very soon.